Hi, welcome back to High on Utah. I'm Heather Groom, and today we're going to do another segment just with questions that I receive often. So, we're going to group them in different categories, and we're going to start by talking about real estate investments. So, I'm going to do the top 5 questions that I've been getting lately about real estate investments. I'm going to use my old lady glasses here, and I printed them off. So, first of all, one of the questions I get is, what are the best real estate investments in 2025? And what should someone focus on? So that's a really great question. The best real estate investments for 2025, even though we're now going into fourth quarter, I would say we still have a very good market right now. Pricing is low. You're still catching the lowest price points we've seen for a while. And then we've also heard that the Fed is planning to cut interest rates just even in the next 2 weeks. And probably there will be another price reduction or, sorry, a rate cut by end of year. So it's giving buyers a little more confidence right now. They're starting to feel better. They're saying, okay, I'm going to jump back in the market. So I'm going to talk to you about a few of the investments specifically that would be good for 2025. So I would say there's some good ones right now where maybe you can rent the basement, like maybe a mother-in-law apartment. I have a listing right now up in Emigration Canyon where you could live on the main floor and then rent out the basement. The basement rents for 2,000 a month, and when you start adding that up with your what you're making for a house payment, it's a great play, and especially because it's had about a $75,000 price reduction, just because the market's been slow. So you're going when the market picks back up, you're going to be hitting that equity play, and you're bringing in some money per month. To subsidize your house payment. So that's a great kind of what we call house hacking, house hack trick, but basically having someone else to help subsidize your mortgage. I'm also seeing some great deals in new construction right now. So definitely give me a call about some of those. I have some where they're reducing interest rates for even a year or two down at 5%. And so that's a huge help for people. We can do buy downs, like a 2-1 buy down. There's some great, basically incentives as well. Some of the builders will even pay your closing costs. I have special relationships with the builders, and so they offer my clients more than if you were just to go and talk with them. So definitely call me about new construction. And I would say there's some areas also in the state that have been hit, I would say, a little bit harder. I kind of just refer to it as like the I-15 corridor. So the further you get from I-15, so if you're looking at like Harriman, Saratoga Springs, Eagle Mountain, some of those other cities, because they're a little further from I-15, and people in this economy have been a little worried about, gas prices and things. They tend to they'll want to go a little further out, but there was a lot of building that happened probably over the last few years in some of those cities like Harriman, Eagle Mountain, Saratoga Springs, specifically. Also South Utah County, like Santaquin. And so there's some really great deals because they already have some inventory. So they're trying to move, a lot of the home builders are trying to move their products. The other day, one of the builders I work with was offering a 7% incentive, if you can believe that. 7% of purchase price to be used for your closing costs, to bring down the price point. I mean, that's a substantial amount of money. So I would say it kind of depends on what you're looking for and what you need, but there are some great investment opportunities by end of year. So, okay, let's go to the next question. What's the difference between cash flow and appreciation in real estate investing? That's a great question because cash flow is what you're bringing in usually per month, is what we refer to it as. And so a lot of properties right now, because of the high interest rates, they are not cash flowing as much. Because you're not able to profit as much by the time you're renting it out. So, a lot of properties right now, we say they don't pencil, and that's just referring to they just struggle with making it work to where you're in the green or the positive. on it. And the appreciation is very different because right now, especially, you're buying things at the lowest price point. So when the market takes off, the appreciation follows. So, it's two very different things. I do a lot with both. Sometimes I can find a deal where the cash flow is great. And then other times we find really good equity plays. So something that's maybe undervalue. A lot of times people maybe have to sell really quickly for work. And so they're just, selling for a loss right now. So we are seeing that. So that's a really good question. So let's go to the next one. And I get this one too. Uh, which is better to invest in real estate or the stock market? And I tell people I invest in the stock market just as much as real estate. So it's important to have a diversified portfolio. You really want to diversify your assets. And one of the problems I see with some of my older clientele is they have a lot of stock and they're trying to live off dividends or selling, and the stock market really stresses them out. And it would stress me out too, because having to live on that, and lately we've been watching the stock market be very volatile. So the stock market, I too often have people that only do one thing, and they'll only do the stock market or they only do real estate. And I tell people it's actually really good to do both. And then even within real estate, I would diversify your holdings. So, for example, for me, I have nightly rental properties. I have two nightly rental properties like Airbnbs, short term rentals. Also, I have one that's a 30-day lease. It's kind of like a modified between short term and long term lease. But it's a 30-day lease. Usually, we have people that rent it out for 2 and 3 months. Maybe they're building a home, they might be relocating, they might be actually, we've had a film crew that came down to St. George and was filming Horizon. We've had people film documentaries. We've had people that stay that just want to be snowbirds, that maybe they just want to be somewhere for 2 or 3 months. And I believe that that trend is actually growing. I think we're going to start seeing more people as they start working remotely. Then they have some flexibility. So they're starting to say, well, why would I want to just stay in one house all year round? I'd rather, be able to rent out one for 3 to 6 months and then kind of hop around. So I think that trend is actually growing. So I do have one property that's a 30-day lease. And what I mean, and what's funny is most people say, oh, do people only stay 1 month? Actually, we usually get people that stay 2 or 3 months at that property, which most people don't realize. And it can be more lucrative than having a long term lease, because if you have a long term lease, so for that property, I'll give you a specifics about that property of mine. It's right across from Sand Hollow Reservoir down in southern Utah, down in Hurricane, Utah. And it's a very popular destination. There's a golf course, Sand Hollow Golf Course and Resort. There's also Sand Hollow Reservoir. There's Quail Hollow Reservoir as well. So you've got reservoirs for boating. So some people, they just want to come out and be on the reservoir. We're also less than 30 minutes to Zion, so from that location. So a lot of people want to go to the various state and national parks that are in the area. So it's kind of a good landing pad. But we can rent that out per month for 3,500 a month, and it's furnished just like an Airbnb. So it's got utensils, pans, couches, things like that. But I don't want to say bare, but it's definitely minimum. It's not like it has to have so much decor and everything, but it's very nice. It looks nice. It's very well decorated. But we can rent that for 3,500 a month on a 30-day lease. But if we were to move in a renter with a 12-month lease, we'd probably be renting it for 2,500 a month. So we're talking $1,000 a month difference on that property, just by being able to do a 30-day lease. So that's important to know. And then the other holdings that we have in real estate, I have everything from land. Raw land is also good. It doesn't cash flow, to be clear, but there are really good equity plays with that. So we have land, and then we also have long-term rentals as well. So there's even varying products within real estate. And depending on your age, when you want to retire, it's all about the passive income if you're looking to retire soon. then we're going to put you on something where you might be able to get what we call mailbox money, which means no brain damage or low brain damage, and you're getting a check every month. So just know there's so many options within real estate that it's great to give me a call and I'll talk with you about what your goals are, what you're looking for, because some people really need the cash flow. Other people are saying, I don't really care about the cash flow. I really want a big equity play. And some people are saying, hey, I really just want the passive income because I'm looking at retiring right now. So definitely give me a call, but that's a really great question. So let's jump to the next one. How do interest rates impact the real estate market? This is a great question. They very much impact the real estate market. So, high interest rates are what brings pricing down. As we start seeing rate cuts and interest rates go down, we're going to start seeing pricing go up. So, you're going to start seeing the prices of things. And just recently, I actually had a situation, more than one, where we went to multiple offer, which was surprising because usually in August or September, that is not a popular time to go to multiple offer. But it's almost like we're having a later summer. We're kind of having this drive into the fall. I believe that my fall will actually be busier than my summer and my spring. So fall is looking really great. And so if you're looking to invest, you really want to do it sooner while the price points are lower. So when interest rates come down, again, that question of how do interest rates impact the real estate market, they go hand in hand. And even if you're a cash buyer, it still impacts the market because price points will go up as interest rates go down. So we just need to kind of think about all of those aspects. But that's a great question. So the next one would be real estate market trends for 2025 and then also 2026. What to expect. So again, we're just in the last quarter of this year. I'm seeing properties move that have an ADU or what we call an accessory dwelling unit. So a way for them to maybe have a relative live with them, maybe have a renter live with them. Those properties that have mother in law apartments or an accessory dwelling unit, those are moving pretty well. Their price points have also remained pretty steady as well. Those are moving. I'm seeing new construction move because of basically incentives. I even have products right now that are not listed on the MLS that are fantastic deals. So again, give me a call about those. And of course, just single family. We say that there's a few D's that impact the market, like the letter D, and those are divorce, death, degrees, and diapers. And the reason all those D's matter is because in any market, those people are buying and selling properties. So if they're getting a divorce, clearly they're liquidating, homes or switching assets. I actually am divorce certified, and so I do a lot of divorcing types of properties as well as just kind of asset relocation on that. So divorce, um, and then also sadly probate. Like we were saying, kind of on death or dying. A lot of my clients are inheriting properties, and they are all of a sudden saying, I don't really need my dad's home. What do I do?" And one thing I want to make really clear is because I'm a top agent in Utah, I'm in the top 20. I also network with top agents throughout the entire country and world. And so if you have a property outside of Utah in other states, definitely give me a call. Especially, we have a lot of flow between Idaho, Arizona, Texas, California, Washington. I see probably the most amount of people coming and going from those states. And what I really want to make clear on that is that if you have property in these other states, I can connect you with a very good agent. Or if you're looking to either relocate, move, a new job, whatever it might be, definitely give me a call because I can help with that and connect you with someone great. I just recently did that for a client, and he's had a great experience in Texas. with his agent. They were able to find an off market property. So, really great opportunities there as well. So, definitely call me. Most people always think, oh, just call Heather for Utah, but call me for any other property. And especially if you're inheriting properties as well, because there's a lot to know in that arena. So, I would say, going back to also degrees as well, people that are buying in this market, a lot of jobs. People are also moving back to the office. They were working remotely and now they're being required to go back. So I've had a few clients move back to California, back to Atlanta, Georgia, to places where they are headquartered. And so they've sold their homes out here. And then also diapers, just growing families. A lot of times, if you are in a one bedroom apartment, that's not going to work if you have a baby. So definitely give me a call for all of those. But we are seeing that properties are starting to move faster, and especially nightly rentals. Nightly rentals have been very slow for the last 3 years because interest rates have been high, or second homes and luxury properties as well. But now we're starting to see the days on market. So, how long it's been listed, we're starting to see that number shrink down. So, it's important if you are looking for a second home, especially like maybe one that you can offset the payment with, like an Airbnb or a short term rental down in St. George area. Definitely give me a call, or maybe Park City as well. But those are right now such a deal because some of those have gone down as much as 20 to 25%. I would say those properties have been hit the hardest. A lot of the Airbnb, just because it's investor based, it's more risky, and so people don't want to take on another mortgage. So it's been driving the pricing of those homes to just rock bottom pricing. What I'm seeing and what I'm expecting, and again, this is just world according to Heather Groom, but I am seeing that we are going to pick up in that market already right now. We're already starting it. So going into fall, winter, and then I suspect that we are going to have an early spring in 2026. Typically, January is fairly dead. I don't think it's going to be really dead. I think we're going to have a little dead spot. And then I think by middle to end of January, we're going to pick back up and we're going to have an early spring, because this year we didn't really have that. And it was just kind of a wonky market. By 2026, I think we're going to be solidly in buying mode. So we're going to see a lot of buyers buying. And so you better kind of get on the front end of that, because then that way you're going to get the incentives, like the loan incentives. You're going to get the lowest price point, and you're not going to be competing with multiple offer. We have not been building very quickly the last few years. Really, we haven't really caught up in some markets since COVID because things slowed down. So some products maybe were overbuilt, like in some of these areas that are a little further out. Maybe they built too many townhomes. But they haven't been building a lot of luxury homes because those are more risky right now. So we're going to start seeing, not only are those homes selling, but we're starting to see that next year, I think we're going to be back at multiple offer. I'm already seeing multiple offer once in a while now. And I think that trend will continue. And we're going to see that probably in as, soon as even January. We're going to start seeing that right now in the fall, and almost through Christmas. But then it's going to get really a little bit more crazy in the spring of next year. So I would say definitely, if you're thinking about spring of next year, get on it a little early, get involved, give me a call starting in January, because by April of next year, I think the market is going to be pretty crazy. So definitely really good insights and questions from you as you've written me questions. So I appreciate that. So those are the top 5 questions that I have with real estate investment properties for 2025 and 2026. And I hope those questions have helped. Thanks so much.